Today we're interviewing Hunter Watkin, investor, good friend of mine, very solid brain, very solid mind. I definitely look up to him. We actually met serendipitously at a networking event around the Melbourne Connect co-working areas. And yeah, I mean, hit it off and now he's here. So Hunter, tell us a little bit about, investing. Why'd you get into it?
Sure. Thanks for having me again, Ollie.
Of course.
It is true. And
don't worry about him, he's gone.
And Ben is going to come in with special questions.
Of course.
Yeah, it's great to be here. So background and investing. So I have been a venture capital investor at Rampersand for coming up on 3 years. Rampersand is a Melbourne-based firm but has team all across Australia. The background on coming into investing, basically, it's not from when I was born. It's probably from a couple of years before I graduated. I did both law and commerce at Monash University. It was a grind, wasn't super inspired by the typical pathways you'd take. Was someone that knew they wanted to make a massive impact, found service-based work, somewhat interested in refining a skill, but was much more obsessed with how can you actually change the way people do things, make it more efficient, spend less time on the stuff that burns people out. And both my folks were lawyers, have worked incredibly hard, earned themselves comfort and safety later in life. But I was just hungry for something a little bit more different. So in my final year, underemployed, at home, middle of COVID, having just done a couple typical internships, basically reached out to Rampersand, like a good hustler that's looking for a role should. And they said no originally, and then a month later, they actually came back around and we had a few calls and I started screening deal flow for the firm. And yeah, on reflection, if you do want a job at a venture capital firm, you do need to tailor the outreach, obviously, but have a think about what their problems are as a firm and how you might be able to hit the ground running and add incremental value to them. Can chat about that later. But yeah, that's the journey to investing. Can go deeper on what venture capital is, if that's helpful for your audience.
Yeah, I mean, I'm happy with that. I mean, sure. I was going to actually ask, when you first applied for the investor's role, what is the biggest pitfall you fell into when applying for the investment position?
Pitfalls that I've observed with other people applying?
No, just reflection of your own experience.
So the biggest mistake I made early on?
Yeah.
Not in applying?
Or even just when applying.
Okay. I think, to my point earlier, you've got to think about what are the problems that a venture capital firm faces. They're a bit like a startup. They've got scarce resources, most of them, and very finite time and attention to dedicate towards training someone or perhaps making sure that they're ghosting them and following them along the journey. So I think you've got to think about, all right, what does this venture capital fund do? What does it have to deal with? What are the jobs to be done? So you need to learn about the functions of a VC firm. And then what kind of incremental project might you be able to do that might help them? So an example of some work that students have been doing in Australia is helping a group called Cut Through Venture with a whole lot of data-related projects, whether it's surveys, helping them collect information, build reports and turn that into distributable material for them that helps that group Cut Through increase its brand, increase its awareness and drive deal flow, which is a critical thing for venture capital firms. So yeah, the main pitfall is just make sure you're not thinking about, geez, I really want a role and offering yourself up as desperate and impressionable. Try and go a step further and put yourself in the firm's shoes and propose a body of work that you could do that's low friction for them, that has no, I guess, negative.
I think that's reasonable. Yeah. Find something that they need. Think about it a little bit before just applying. Don't just say, I want to work for you. Say, here's what I can do for you. And I've actually put some thought into this. Okay, I think, Hunter, I'm just generally curious because a lot of people in the community are a bit jaded with venture capital. Some people also don't really know what it is. Some people think that it's just sort of make big money, sort of do that. Can you describe to our audience, like, what do you think venture capital is, and what is like the biggest misconceptions that the public and founders actually have about it?
Yeah, it is very possible to become jaded in venture capital, no matter what kind of stakeholder you are, both founders and investors. Part of it is because everyone on each side is fighting over an outcome that only accrues to, a very small minority of people, right? And to reach that, a lot of amazing things have to be true on both sides, and it's a bit of a treasure hunt. As an investor, my job in venture capital is to think about the areas of innovation that could really take off, make sure that the market is extraordinarily big such that most businesses are precluded from attracting venture, and then go about trying to find companies that have the perfect team to solve a problem that they'll likely be competing with people at a global scale on. And then I guess on the founder side, how you might get jaded is the process of raising venture capital, which you two have been exploring. It's not like it's super high friction. You can't, to some extent, when you have a conversation with someone, you learn what they're looking for. You can store the questions that you've been asked and answer them better each time. But you don't have this like running Notion page that every single investor is keeping up with and reading top to bottom, such that the next conversation you have, you can assume that as read. And so that's why I think on the founder side, it can be a process that makes you jaded. And it's part of like something that venture investors are very aware of, and it probably frustrates them as well. I think you should have that in mind as listeners. And yeah, it's just it's an inefficiency, but a reality of venture capital. I think, why is it like that? Ultimately, investors are looking for something that's like proprietary in terms of an investment opportunity, and they want to feel special when you're talking to them. They want to feel like this is something like a romantic marriage that's about to happen. If you were to kind of like send a full email outreach to every kind of investor in Melbourne or Australia, whatever your market might be, they all of a sudden don't feel special. They don't feel like they've got unique access to an opportunity. And so it's just this interesting dynamic that exists in venture capital that makes things inefficient.
Yeah, I mean, I was told by someone in the past that when you're speaking to an investor, understand that they are very emotional, but from the sense that they don't want to miss out on opportunity. When you make an investment, or when you have in the past, do you try to approach it with logic or rather emotion?
Good question. That is true. Fear of missing out is a very important thing that founders should try and leverage. How that looks today, like to answer your question on approaching it with logic or emotion, it's a combo, but how that looks today when it comes to this fear of missing out thing is, why should I be petrified about missing out on investing capital right now rather than waiting till you next need to rattle the can or run out of money, or perhaps never need to raise again? And that is really, really magnified in a capital constrained environment that we're in right now. You will have noticed that the definition of pre-seed has shifted immensely, as has the definition of seed. And for a lot of investors, they're just giving you a too early without super helpful feedback around a milestone that's definitely going to unlock their capital.
That's actively happened to Ben.
Yeah. Yeah.
I mean, Ben is engaged with a tremendous amount of different investors all over the world.
Yeah.
Many in Australia of which have said, in other words, you are too early.
Yeah.
As if we need to be listed on ASX before we get an investment.
Yeah.
Right?
Yeah.
So I suppose pre-seed, seed funds or seed rounds of funding, I'm a little bit confused myself as to what the difference is.
I mean, Oliver and I have both been confused. We've been sort of going it back and forth.
Sometimes
are we pre-seed? Are we seed?
Sometimes we just say seed. Sometimes we say pre-seed. Depends on the day, what way the sun shines.
So what actually, I guess the question I really have in mind for you is what actually is venture capital? What is the goal of venture capital? And then, maybe you can take us through the pre-seed and seed and dispel our misconceptions.
Sure. So venture capital is funds management. I work on behalf of a fund as an investor. The people's money that we manage is a combination of very wealthy individuals through to super funds. We, as Ramsand, only manage the money of individuals and family offices, but a lot of the large investors, particularly overseas, manage super money. Our job is to deliver returns for our investors, fundamentally. Some venture capital firms will have other mandate things like there has to be a unit of positive impact for every unit that is sold by a portfolio company. And so in the practice of that, we are looking for companies that have potential to generate hundreds of millions of dollars of revenue a year and that cost very little to get to that scale. And so you are looking for extraordinary businesses. Does that answer your question on what venture capital is? Do you have specific follow-ups?
I think also that there's this notion that venture capital differs from traditional investing because we know, and just statistically speaking, that the vast majority of startups that you back are going to fail. And so we're relying on that one startup that makes outsized returns in order to reach the overall returns that you're expecting for the fund.
Correct.
In total.
That's right. And, as startups move through certain phases, you are less likely than likely to raise the next round of capital. So as a seed fund, we probably expect that a good majority of the companies we back, we hope, will raise follow-on rounds, but the reality is that not all of them will make it into a profitable business that someone else wants to buy shares in, which is how you make money as a founder. So yes, you're right, Ben. The vast majority of startups that most venture capitals back will go to zero. To be honest, the hope is just that they can discover that quickly and move on to the next thing rather than that take a long time to discover, which is just the reality of doing something really, really difficult and challenging. Working out whether you're going to get there can take a while.
So what is the hit rate of a good VC in terms of successful investments?
It's funny because it depends on success. It depends on what successful is. So there is a fund in Australia that's got a really strong brand called EVP. Their brand is that they will back companies that probably aren't going to go into the orders of magnitude of 100x necessarily, but that are very highly unlikely to go to zero. And so that just kind of means that their success or their bounds of returns are somewhere between zero, but most are between, 1 and 10, maybe 15x. Whereas other funds, I hope they're okay with me saying this, but there's a pre-seed fund in Australia and globally called Possible Ventures. They will only invest at the pre-seed stage in bonkers ideas. So it has to be impossible at the time they invest almost, I think is their mandate.
That's funny.
And for them, I would be absolutely certain their hit rate is lower than EVPs, but they are probably seeing a couple companies that return much more than any one of EVPs. I don't know. I'm speculating.
Yeah, I suppose it's just more risk but bigger return kind of analysis. Yeah. So going back to the other question, pre-seed versus seed.
Yeah.
I feel like the definitions of those have become a little bit skewed over time. So let's talk about that. What is the difference?
So the way Rampazan looks at it, you are at probably like the seed stage. If you've got a product in market, people are using it, and there's an opportunity to monetize. People would pay for it, but you might not have turned it on yet. Pre-seed is your idea stage. You haven't really got a working MVP that people are using and getting value from. That's how we define it. It will be an absolute medley of different definitions if you speak to other people, but that's how we separate it. We do invest pre-seed. Our condition is you probably do want to have someone that can build the product on the team, and you probably want to have an amazing go-to-market insight, like a really uncommon insight that gives us comfort that not only can you build it, but you're going to be able to take it to market.
I suppose, Hunter, you've also grown up potentially listening to people like 20VC and looking at the returns from Founders Fund and venture capital firms in the US. What do you think is the main difference between venture capital in the US versus Australia, and what can we learn from them?
Oh, great question. So there's a couple of ways to look at this. One of the easiest ways is like the mindset of a founder. I think a lot of this is changing, but in the US, if you don't rock up thinking and articulating that you're the best ever, people will just laugh you out the room. Like, you just won't get a run because it's so competitive there. Yeah. A lot of people are the best ever. And so if you don't rock up with that confidence and mentality, you're not going to get anywhere.
like Ed Hovey said, be American.
Yeah.
Be big.
Here is kind of the inverse. If you do rock up like that, it's still great, but it's not necessarily the majority of people. And I reckon I was always this way. Don't oversell yourself, deliver results, be reasonable, show both sides of the argument, don't be insincere, which, like, there is a balance, but a great deal of Aussies are like that. And I think certainly my boss feels this a lot. I'm sure others do. Like, self-deprecation and setting limitations on yourself, it just doesn't bode well for raising capital, leading teams, that kind of thing, when it comes to building something that is abnormal. So that's one thing that I'd say is different. I would say, interestingly, I just went to the US for a few weeks, just zigzagged around New York, SF and LA, meeting VCs and operators. They're interestingly probably more candid over there about the performance of their fund, just because the ecosystem is so much more mature. Like, people move around funds over there like, you know, Deloitte and EY here, like those classic accounting firms. Whereas in Australia, a lot of venture firms are still startups. Everyone is still, I guess, finding themselves as funds and individual investors. And so over there, everyone's a bit less nice on the surface, but probably a bit more direct. Here, everyone's quite nice on the surface, but underneath
judgmental.
And like competitive. And like, I'm not saying that I wouldn't fit into that category. It's just the nature of the different ecosystems and their maturity, I would say. And when it comes to innovation, like, I think you put two startups together. An Australian startup that reaches Series A and Series B, you can almost be certain the quality of founder is going to be stronger than the average startup in the US. The reason I say that is there is a lot more to overcome as an Australian founder that's getting to that stage. You've got to go to a new market, set up without existing networks, all that kind of thing. So I think the startups that do get through to that stage from Australia do comparatively better.
That's interesting.
What do you think are the main barriers for Australian startups? Is it just in terms of accessing capital, like the risk appetite for investors is lower here? Or could it be that Australian founders on average aren't as good as US founders?
No, I wouldn't say that. It's not my observation. I've met US founders, a smaller sample size. I would say that. So repeat that question once more.
Yeah. So, what are the main barriers
Yeah,
that
barriers. Okay.
Australian founders face?
So I wouldn't say it's a capital issue. Like, I wouldn't say it's an access to capital problem. I think that in this market, yes, it's a bit harder to attract overseas capital, but there are enough funds around such that if you're near enough to the grade, there is capital available. Now, there will be friction in finding it, sure, but I don't think that's as much of a barrier. I think the bigger barrier for an Australian startup is if you're building in a niche vertical, there can be this awkward market sizing challenge where you could dominate Australia and it might be like a somewhat geographically tied startup, but that's not quite big enough for venture capital. And so you either have to have, a marketplace that has cross-border network effects or a software that isn't tied to jurisdiction by regulation or any type of, system.
Yeah.
They're the awkward ones, and I regularly meet great startups that I think can generate themselves a lot of money should they get the funding, but are just an awkward fit for venture capital funds. Now, a venture capital fund that is trying to return $20 million will have lower sensitivity than a venture capital fund that's trying to return hundreds of millions.
Right. So
I think we've seen a couple of startups in Australia sort of leave recently because they weren't able to attract funding, even though, for example, their Synchron by Tom Oxley was competing against Musk's Neuralink, and yet they had to move to the US, and their workforce has been cut down a lot in Australia because they weren't able to attract the funding that was necessary. Maybe a similar thing might be happening to Cortical Labs. I'm wondering, why that? Why is it that even when a company that is succeeding at such a high level and has moved to the US, why is it that we still can't back them and they leave?
I think it's fair to say there are some certain profiles of company that are less comfortably backed by Australian investors, and it's probably not a market size challenge. There's a company that's not announced yet that was in market in Australia for 6-9 months, went to US and raised from arguably the best possible fund over there. And that's a shame for the local ecosystem. And I know that there were funds wanting to back them, but just couldn't quite get comfort with the capital pathway. And it sounds like you guys have some case studies like that. There are certain industries that I think there are gaps. I think consumer-facing software, I think generally investors don't quite get comfortable with in Australia. So for some of those startups, going straight to the US might make sense, or straight to Europe, probably the US. I think medical devices are a tough one. There are some early stage funds that will back them at the idea stage, and then there's a bit of a valley of death until it's like FDA approved or something like that.
Yeah.
And so I think it depends on a case-by-case basis. Let this be a call to arms for investors investing in that space to come straight to me, because I do meet amazing startups in this category and am probably less helpful than I am with other startups when it comes to connecting with the right capital.
So what is the most investable kind of industry for a VC in Australia?
AI infrastructure right now. And there is some of it, but not lots. And I think, on my recent trip to the US, I got a really crystal clear view of how they view the right pedigree for that kind of startup. And I think, AI infrastructure is loosely described at the moment, but AI is all the hype at the moment, much like Web3 was for a little while. Australian investors are open for investing in that kind of technology. I think the comfort zone for Australia is B2B software. I don't think that's particularly contentious. Marketplaces are an interesting one. It's certainly something I'm spending a lot of time on. There aren't that many recent success stories of marketplaces, but there are a few really exciting up-and-coming cross-border network effect marketplaces. A lot of Australia's marketplaces have tended to be more localised. I think business software definitely is the comfort zone.
Yeah, sure. How do you think this whole AI trend is affecting the current climate of investment?
So I think the general advice for founders is don't make yourself an AI business just to try and attract investment, but have a strong view on how it impacts your business. If you're just kind of trying to say the thing that you think investors want to hear, they'll probably see through that. If you have conviction about why AI won't disrupt your business, feel free to say that. I think that can be compelling. We had a founder pitching us recently. We had people in the industry saying AI is going to disrupt his business, and his answer to how it won't was really compelling. And so I think just having done that work's important. I think there's one thing, I don't know how you back the right company early stage around defensibility, but there's an opportunity for a lot of AI applications right now are not production grade for businesses to readily use or rely on. As soon as you're relying on something and you're delivering a professional service, there's a high bar. But there is going to be applications that reach that over time, and it's going to be more useful for the lower end or lower risk of the market before you get to law firms, healthcare, whatever it is. I think there's a Stripe or a Zapier type play where you just embed generative text solutions, that kind of thing, into workflows, and the easier you can make that for developers to self-serve and do that, that's a great business. And I think that's where most startups should be treating AI. If you're not an AI first business, wait for that kind of solution to come along. Definitely have a strong view on it, but don't feel that you need to contort your business to attract funding just because that's what investors are looking for.
I think what you're referring to is, companies like LinkedIn and Google Docs that might not traditionally be, AI businesses. They're sort of service businesses or social networks. They will include generative AI into their workflows to smooth things out for customers.
They're larger companies that can probably have full teams to have an embedded AI assistant. So Notion, for instance, has AI. It looks like it's part of the UX, that kind of thing. For early stage startups that generating text, generating a letter, generating some kind of print might be relevant to whatever workflow they're supporting, but they shouldn't go and make sure they're doing it perfectly and embedding it if it's not core to what customers want. So I think as an early stage startup, wait for the solutions that make that really low friction.
Yeah.
Yeah.
A lot of people are saying, or at least they're worried about the current state of the investment world. It's harder to get an investment now, December 2023 than it was in January 2023, it seems. Do you think that there's a investment Armageddon on the horizon?
No, I don't think there is. It depends who you are. There will be people that have that experience. Venture capital is not going anywhere. There's comparatively more dry capital at the bottom of this cycle than there has been in previous. Yeah. I don't necessarily think it's the worst is over. I still think there's going to be some pretty heartbreaking stories of companies that perceptively did well and could have otherwise gone on to do very well, but just got their timing wrong with how much capital they raised, what their capital stack looked like, that kind of thing. The reality is it is harder. The positive is if you can endure and weather the storm and you can survive and put one foot in front of the other instead of trying to do too many things at once, there will be a much scarcer supply of progressed Series A and beyond technology companies. There will be available capital, probably more than there was in previous cycles, and they will be fighting over investing in these companies. So I would have faith that the market will correct, that if you're worried about dilution right now, that's fine, and a lot of companies are. But in the future, good companies will be rewarded. There will be capital. It is, don't get me wrong, it is harder for pre-seed companies right now.
Yeah. I mean, we're feeling it. We're feeling the burn. That's for sure.
No, soon will be seed. Don't worry.
Soon enough.
I think a lot of people view investment, well, there are competing views about what venture capital is in terms of, is it more of an art or a science? I've seen some venture capital firms have like very strict criteria on scorecards, and they sort of ask their investors to rank each startup on defensibility and on various metrics, and they almost invest from that number at the end. And then other people just go based off gut feel, just intuition. I think these founders are great. I really want to back them. Where do you think for you that sweet spot lies between art and science? Like, how do you go about evaluating what a good startup is and what a startup that you don't want to touch is?
I would say the way we invest, the way I invest at Ramsden is we do have those frameworks, we do have those criteria, we do have those checklists to make sure that we're doing all the mental gymnastics required to think about how a company might play out. Then it comes back to why we really, pardon my French, fucking excited about this company and why we prepared to forego the obvious risks that might exist. You need to have that approach when it comes to early stage startup investing. Two things to note. One is if the company is not really fucking exciting to the naked eye, then we need to make sure that it is to a profile of people that would want to work there, because ultimately early stage startups very much live off the quality of the team and their cohesion. The second thing that is particularly important that you learn in these markets is resilience, and not only resilience, but the founders have got to want to live like an extremely unusual life. They've got to want to dedicate themselves to something, and they've probably not got to be satisfied with either, they can't be satisfied with just earning an above middle class income and then just being like, great, I'm done. Like if a founder is going to be happy with $5 million exit and then, just taking the foot off the gas, you probably don't want to back that as a venture capital fund. You want to either back a founder that will stop at nothing because they're on a mission. And like there's one very clear example in our portfolio. I won't name it, but if someone wanted to go in there, they could probably go and guess. There are many, but there's one very clear one. And then otherwise, the person has got to want to be filthy, filthy rich and dominate the world. Like you are kind of looking for those two categories, or the team. And so you guys might be one of those.
Yeah, low key, Ben and I just like,
Just
we
fist
were
bumped under the table.
straight up being exposed live.
And you know what, like I don't know if I'm yet at either end of those spectrums.
Yeah.
I do want to start a company, but I'm not sure if I'm there right now. And so I think venture investors are looking for that kind of abnormal potential.
Yeah. So I don't want to get too deep into the details, but if you were to start your own company, what industry do you think you would have the biggest advantage in kind of navigating, given your experiences as an investor?
Good question. I reckon a year or two ago, I wouldn't have had a really strong answer to this. So the natural one is probably like funds management tech or something like that. And I know that tech stack very well because I'm a customer and I have a pretty strong view of what good looks like and why existing solutions aren't any good. The other area is legal tech, which is my origins. It was the environment, although it was pretty barren when it came to legal tech when I was working in legal services, but it's really having a good surge at the moment. There are some amazing Australian-based startups that are dramatically changing the working lives of my peers from university, which is really exciting. And I understand the customer. Both my parents are lawyers, all my friends are lawyers from university. And frankly, like it's an industry that I think has a very high barrier to entry when it comes to technology. but could become it could really change the quality of life for lawyers and the way they deliver services, technology over the next little while. There's a company, for example, in the US called Pursuit, which is a legal marketplace, and it shifts the model from like services by the hour based work, very opaque, don't know how much you're going to pay for a certain outcome, to tender for an outcome. A client looks at a panel of different service providers and then chooses it in a kind of democratic way. And so there's interesting things happening in legal tech, and that's an area that I think I could hit the ground running.
Yeah, I feel, given your experience and background, perfectly poised to dominate, for sure. I look forward to the future.
Reminds me of Sprint Law and their sort of packages.
Yeah, absolutely.
So I want to delve deeper into your investment philosophy. In a Medium article, you write about questions that you as an investor or Rampersand, would ask a founder in order to determine whether or not they are suitable for investment. So one of them is, to what extent is supply homogeneous or heterogeneous? What costs are you reducing for participants? Will you win in a geography, a category, or globally? How fragmented is supply? Is the supply underutilized or inefficiently accessed? So
he's like, I don't remember writing that.
So maybe we can like unpack some of these. Like as a founder, I'm reading this, I'm a little bit confused. Well, what do you mean by like, to what extent is supply
homogeneous
or heterogeneous?
So what Ben's just read out is questions filled with jargon in relation to marketplace technology startups. What I mean, I'll answer the first one.
Yeah,
I don't know if we'll have time to
we
go
can leave
through
it
all of
there.
them. So, and the background behind that is ultimately as an investor, you're trying to make investment decisions as quickly and as efficiently as possible. There is a lot to be learnt from looking at why past marketplaces have been successful and some have failed. So when it comes to assessing a marketplace, unlike B2B SaaS businesses, there are some specific questions that as a founder you need to have a very good answer to. Otherwise, investors will not think that you are going to be able to build an amazing marketplace, because you need to have done all this work up front.
Yeah.
Okay, so heterogeneous versus homogeneous supply. Think of it as differentiated versus commoditized. Differentiated means, like, one end of the spectrum of differentiation, really classic example, is Airbnb. Yes, you may have some units in the same apartment building that are quite similar, but largely if you were to add 50 units in a certain area, so like different places you could sleep, in a caravan, hotel, apartment, they will all be differentiated. And so when you're going to book your accommodation in SF and get the fright of your lives about how much it's going to cost, and perhaps decide that you don't want to buy, but at least want to see what's on offer for your stay, it is more valuable for you to see 50 than to see one. You just got more of decision-making power. When it comes to homogeneous supply, when you're ordering your Uber in SF or your cruise and you're 20 minutes away from dinner, you just want to get to dinner on time, you're not too fussed who drives you. And so as long as there's one available, you don't care how much others could have fulfilled your order.
So, yeah.
And so when you're a founder, you're either going to be wanting to make sure that you can just at least serve the demand, or your value prop is giving them variety and choice, and having a clear view of what that looks like will inform how you grow, how you expand, all those kinds of things.
Interesting. So
yeah, the summary is you need to have criteria to quickly assess different types of startup. For this, in this case, in a perfect world, marketplace founders will read this and then they'll be like, great, I've got good answers to this, and I can go have a really productive discussion with investors, hopefully myself.
Yeah. I want to walk through a brief exercise. I just came up with this on the dome. So you're an investor, you got good experience. Let's, paint a picture that, you had to leave, your current life and just go and start a new life starting at absolute zero. What is the first thing that you would do in order to get yourself back off the ground?
Let's assume I'm an 18-year-old, like a
Sure,
mature adult.
Yeah,
at
of
least.
course.
Learn to walk.
Yeah. Let's
So what first?
fumble around for some food.
Yeah,
I don't know. To be honest, I'm not regretful about what I studied and feel very strong and able to take on the world now. But when I was at school, what I thought was going to be helpful to me later in life was very incorrect. And I don't think I was steered particularly well by, I don't want to blame my school, but just that system.
Or traditional education.
Traditional education
has its flaws.
has huge flaws. In hindsight, what would I have best studied, I think? I would have done engineering, software engineering, or some type of engineering, and then tried to maintain some sort of humanities or law to really build on my interpersonal skills. I think being able to be at the first line of defence of building something is something that I will always contribute to, but if something mission critical is down or code's not working, a little part of me is I wish I was able to be that person on the front line. And I just think it's you make your life pretty easy post-university if you've got good grades in engineering and you can talk to people. So that's if you're at school and you're contemplating what university degrees to do, you've got to do what resonates, whatever. But if you're just I'm not sure what I want to do, I would highly recommend having a look at doing engineering and seeing if it's something you'd enjoy.
I think there's a lot of advice around sort of what to do and what to learn in order to maximize your impact on the world. The other perspective, which I think is in a similar vein, is learn physics, because fundamentally, if you understand physics, you understand the world, and you can sort of
You have good logic.
You can reason up from first principles. And then you've got software engineering, which is, can I build applications? Can I actually do things myself rather than having to find a technical co-founder? How do you think that's going to change in the age of AI? Do you think we are going to continue to need software engineers, or that we're going to be able to sort of build applications just by speaking into our computer?
No, I think you will always need software engineers. I still think, yes, you'll be able to do more as a non-technical person, but the software engineer's ability to push boundaries and build the next best thing still places them pretty well to be able to,
of course,
have a prosperous life and get to do cool things. You're obviously both ambitious people. I'm an ambitious person. If you've got an impatience and you want to make an impact, still think that software engineering is a skill set, or at least a base where you'll be able to, into perpetuity, as long as you're hungry to learn, be able to push boundaries, and you will always, have a place in society. I don't think they're going distinct or going to be extinct,
Yeah. So from an investor's standpoint, looking at, two individual founders, one that comes from an engineering background, and someone who comes from a more communications background, they're good at networking, more of the, leader type of position. Which one is more valuable from an investor standpoint?
The answer is both. You want them together. Yeah. They're probably the perfect founding team on paper. I probably get in trouble for saying this. Is you've got probably an engineer, you've probably got someone that's extremely good with people, financial acumen, that kind of thing, someone with an extreme industry insight, and you want that team to be diverse.
Yeah.
You if it's 3 white males, you will invariably not be treated. If it's 3 white males, that is less compelling than a more diverse team. 3 white males that went to school together, less compelling than a team that have different attitudes, different experiences, different beliefs. And frankly, that is because they are the teams that are most powerful. Like, you want that diversity.
And yet, to push back on that,
Yeah.
some of the most prolific founders, the PayPal mafia,
Yeah.
they all very well connected. They're all connected in the same social networks, went to the same schools. A lot of people from sort of Stanford and Harvard, being dorm mates together, and they start companies, and a lot of them go on to be really successful. Do you think that diversity really is going to bring that power, or?
I think it's a great question. It's a great challenge. I think that there are network effects for sure that help companies instrumentally, like especially with early hires. If you grew up and went to Stanford, you will be able to prima facie hire and access talent easier than someone that didn't go to a top institution in the middle of America. That's absolutely correct. I would say that over time, you see businesses in the later stages where if you've got too much of a concentration of a certain type of person, certain type of background, it starts to show wobbles from a culture perspective. And it's not that those individuals are toxic or anything. It just can inhibit growth in interesting ways.
Definitely. I mean, Ben and I firsthand have experienced, working with different characters from different cultural backgrounds, different, backgrounds from education, the way they grew up, the way they were brought up. And yeah, I feel the dynamic you have among the team is so important that I feel like sometimes there might be a compromise to try and fit in, to be diverse as such.
Yeah, you're right.
At the compromise of quality.
Sorry. You are still highly backable if you're, however many white men or something that there's not a shortage of.
Sure.
You can still, that doesn't rule you out, don't get me wrong. And it's a good point you make. An interesting one is the family founders, brothers, sisters, whatever they might be. They're super committed to each other, but also if things go wrong, it's super magnified. If you want to change, if the team needs to change leadership, it's not going to be frictionless. So that is a really interesting one. It's part of why the first thing investors ask is, how did you people meet? What is that origin story? And don't mark my words, investors are fully doing scenario trees of what would happen if certain people in a startup left the business at the point of investment.
Interesting. So let's do a live case study on Ben and I, because we have an interesting former background. So, the first time Ben and I met, let's reflect. Come on, Bella.
Sure. So we were at the University of Melbourne Startup Competition in 2022.
Yeah.
And we'd both come in. It was a sort of mixer event.
So essentially
suss out the competition.
Yeah. Well, the idea of the mixer event was to find your teammates for the competition. But I had already had a team, and so did Benjamin. And so we really went there to just suss the competition and try to see what people were working on to get a gauge on, the quality of the talent. And Ben and I met, we kind of have similar backgrounds because we're both in the medical field. And we were, having a conversation. And for whatever reason, there was a bit of a butthead moment, probably because of the fact that we were too similar, that we were I kind of feel like this guy's trying to one-up me or something, right? So there's a bit of the ego play. And so there was an unspoken rivalry, as we like to say. But, throughout that competition, that probably grew actually, the rivalry until the end. So we both managed to get into the finals of that year.
I actually remember when we went into the finals after we had both pitched, Oliver called me just on Facebook Messenger, and I just happened to have my notifications on.
Be honest.
And I remember I thought to myself, and I actually told my team this, looks like my arch nemesis is calling me. And I picked up, and, he was congratulatory. We both pitched. None of us had won yet.
We didn't know the outcome.
We didn't even know the outcome. But he just said, great pitch. I loved it. We should definitely catch up at some time. And I think that was really good, because I probably wouldn't have done that to you. But after the competition, we both ended up not being one of the winners. And we caught up a few times. We started a We tried to start a cancer diagnostics at home test.
Yeah, I mean, just bouncing around ideas from startups in the local environment. And then, from that, we kind of just started working together. And it kind of worked out well because turns out we do have a lot in common. We have very similar ambitions in the future. And I suppose complementing inadequacies in various ways. So when we go and have, a session where we go and work hard, Ben will be working on certain things and I'll be working on certain things. And they're almost like, I don't know, they're like updating live on the screen, and I'm fixing things that he's writing, he's fixing things that I'm writing, I'm creating slides, he's fixing slides. It's just a very good work dynamic. And since then, we've kind of kicked it off and, been working together since.
So we're good friends, but there are risks, right?
Yeah.
Especially given
hearing
the
that
rudimentary phase of where we met. We were rivals, and it was like unspoken rivalry.
No, I think that's a good thing. Like what you've shown is you're competitive, you're ambitious, you're capable of breaking bread with people. One of the things that investors monitor right from the outset, which is an awkward thing that just exists, is founder dynamics throughout. And so you guys are you've been working together for a while. That does count for something. And over the next little while, as you do potentially go on a startup journey, you will be relying on other people in your network. You two will not be the perfect duo for whatever business you build alone. You will need other complementary advisors. You will need other complementary team members. And I think what will be important is just being super upfront about what your weaknesses are individually as a team, calling that out with investors. Showing that awareness is definitely a strength, and there are startup founders that are petrified of showing weakness, and it manifests in avoidance and avoiding problems. And the faster that startup founders can identify their existential risks to their business, the faster they move.
So do you think it's being scared of admitting the things that you aren't good at to your co-founder or to investors?
I think it's both. Being really transparent about, okay, what's the number one thing that's preventing you guys from making progress right now? Acknowledging that with an investor, making that into a milestone that might change things with an investor or change things as a team, something that might really unlock progress. Just being checking in regularly for that high level conversation is super important.
Yeah. Good. Interesting.
Fascinating.
Something to ruminate over.
So in terms of you, let's say you have a co-founder relationship already and you've got someone in mind that you want to work with. How do you make sure they're the right person? What sort of conversations do you, as an investor, want founders to have had in order to make sure that that is a relationship that is likely to persist in the face of time and adversity?
Great question. You want a long-term mindset, from both parties. There are many a case where businesses progress and certain founders are no longer a fit for the business by their own admission or not, or by their team's admission. So, but you do want that long-term commitment to the business, absolutely. You don't want to be a tourist with this kind of thing. I think other things that you should be testing a co-founder for are probably more around lifestyle preparedness, being able to lever up and support each other when certain important things come up is critical. But if you're someone that's ready to work to the bone for 5 to 10 years, which a lot of great founders do, then you want to make sure that your founder's got the same level of commitment. You're probably going to be owning the same amount of equity. You're probably going to be earning the equivalent of $9 an hour for 3 to 5 years. And so if your founder's coasting, and they're coasting might look like going to heaps of events, not being there with a high ROI mindset, or saying this is too hard and not taking responsibility, whatever it might be, then that can really hurt a founding team as well. And investors see that as well. And if they don't think equity is proportionately spread, then it can be a compromising thing. So yeah, you want to be on that similar wavelength.
Yeah, absolutely. I feel like that's fairly good advice for the general. Very good.
So, you've had a lot of podcasts yourself.
Abstraction.
Yeah.
Lots of guests that you've talked to, potentially people that have been a lot more interesting than some of the guests that we've had on, or a lot more diverse, mainly founders with really interesting ideas, really ambitious projects. What is one of the most sort of ambitious projects that a founder has presented to you, and what did you really love about the way that they demonstrated their idea?
I've got to pick a favourite from the podcast.
Not just from the podcast. It could be from someone that you've interviewed, or someone that sort of pitched to you as well.
I think so. I'm a fan of a startup called New Road, which is this. I don't know if this is the wackiest startup, but I think it's something that you're like, the story is amazing and it could potentially have a really clear positive impact on the world. New Road is basically a wearable device that I believe you put on periodically that replaces taking certain drugs to treat ADHD.
Okay.
And so ADHD has a bunch of side effects. And for some it doesn't, some it does. And there's an increasing amount of children getting diagnosed with it and taking drugs. This startup founder has the story of, her name's Natalie, incubating this startup in her garage, did, neuroscience for 6 years, never known anything else, works with her co-founder in the garage and goes on that kind of journey where it's just been, this is the life's work from the start. Still very early stage. I don't have the latest update on where they're at, but I think every now and then you meet a founder that just has intense founder market fit, and you kind of know that that's what they're going to do probably and for the rest of their life. And so meeting founders like that is really cool. On the podcast, a classic example, highly encourage people to listen to it, is my interview with Olympia Yaga, who is a founder from our portfolio, who's got a pretty amazing business, very fierce founder, solo founder. And
so from what I can, sorry to cut you off, maggot-filled robots to combat food waste.
Correct. Yeah, that's as concise as you can get to describe that business. But yeah, basically processes all kinds of waste. Maggots consume organic waste, and then both their excrements and carcasses can be sold. And the process of doing that with a robot is cheaper than taking your waste to landfill. So a pretty cool business, clear incentives, bit happening, run by this legendary founder, Olympia. Highly recommend people listen.
Yeah,
Absolutely.
crazy name, Olympia.
It's cool, isn't it? Olympic level founder.
I think going back to your story, and you got into investing because you wanted to have an outsized impact on the world. You've said in the past that you've always feared being what your friends and you describe as a barcode. Someone who tags in and out of a building daily to do highly replaceable repeat work. You instead wanted to maximize the impact I could have and the knowledge that you could absorb as early as possible to avoid this. What type of impact would you like to have in the world and within your community?
That's absolutely still true. Where did I say that? Did I say that in the podcast?
I think you may have, yeah.
Oh no, I think I said it in
An article.
Yeah, in an article. Yeah, that's still absolutely true. It comes back to that fear of just doing a job that the next person couldn't do, and doing a job that you either do or do wrong, and just waiting for your time to get a promotion that is on a certain periodic basis. Like that, just I cannot fathom working in that environment. Maybe it's a super privileged view, but that's just the way I think about things. To be honest, At this stage, Ben, I don't yet know what my outsized impact on the world is going to be, but I'm pretty hungry to work it out, and I'm still in that process. And I would be, fortunately, I would be very, very, very stoked if that is being, Australia's best ever venture capital investor. I'm not sure what the path is to get to that point, but that is a potential impact that I want to have. And I'm not yet sure what success would look like to be that person either. Like, you're probably not wanting to just be making money. You want to be doing something else. And so I'm still working that out, frankly. I don't have the thematic that I'm super committed to. That's probably one of my challenges going forward is like, yeah, I'm becoming a specialist venture capital investor, but like, what is that niche that, we expect founders to nail? Like, what is going to be my special thing? Still working that out. But yeah, I'm still hungry to make an impact and don't want to be a barcode.
Absolutely. I think we should probably wrap it up. What do you think?
I think I'm curious a little bit about how you navigate the hunger with also enjoying the moment, right? I think you mentioned these founders that are working
endlessly,
for $9 an hour endlessly for 5 to 10 years, and they probably won't succeed. How do you suggest, and I mean both for others and also for yourself, like how do you unwind? How do you ensure that there's a balance between the hard work and also enjoying your life and not letting it sort of drip by?
Yeah, good question. Haven't nailed it, not doing an amazing job of it. You could probably ask my friends. They probably think I could get the balance better. I think that venture capital investors, even though some founders find them extremely frustrating, they do have a pretty difficult job because most of them are hungry. Their metrics for success can be quite binary depending on where you work, and you've never done a really good job. You don't have feedback loops, so you're constantly kind of anxious to do better and do more, and so venture investors can burn out. A lot don't spend as long as you might think in the industry. Don't get me wrong, it's an amazing job, but yeah, you can get exhausted. And because it's so fun and so engrossing, like, yes, I'm listening to that podcast you mentioned on the weekend. I'm listening to tech as a form of sort of enjoyment. And so, yeah, for me to unwind, I need to be really deliberate about it. So, I'll go camping or I'll go to a music festival and have that sort of very designated time off. I'm not the sort of person that goes and, reads a fiction book for half an hour here and there. Not a huge meditator. Hopefully one day I'll appreciate that and do it. But
yeah, I never quite got into that either.
Yeah,
I feel like
it's a big thing.
I kind of envy it because there are moments where there are a lot of thoughts and having the ability to wind down through breathing techniques and meditation just seems very tranquil, but I haven't quite unlocked that side of my brain yet.
I would refuse to believe that knowing the amount of stuff you're doing, you're meditating. But yeah, that's the truth is it's very hard to find life balance. I think it's more about finding the one or two or three things that give you a lot of enjoyment outside of your work, because you don't want to be fully 100% all in on your work. You need to have some other things.
Absolutely. So we want to switch it up a bit before we wrap things up to just briefly a quick fire round where we just ask AI generated questions. Your intent here is to just answer off the cusp.
Yeah, like one word answers.
Or just, whatever comes to mind first, right? So the first question, if you could time travel only once, when and where would you travel?
1966 AFL Grand Final, St Kilda's only premiership.
Very cultural.
If you had to choose 3 songs that you feel represent you the most, let's just do one song.
Sure.
Which tracks would you make and why?
It would probably be just because I really like them and it takes me to a different place. A psychedelic jazz band in Melbourne called Mild Life. And probably just their best song, Magnificent Moon. Highly recommend people tune in.
Gonna have a sus.
We'll do
For
straight
sure.
after.
If you could swap lives with someone for a single day, who would it be?
Good question. Generic names currently coming to mind. Let's do Elon. It'd be funny.
I was
Yeah.
picky.
Just to see.
Yeah.
Just to see. You probably want to dome yourself after that. I don't know.
What's something that you've purchased recently that's changed your life?
Oh, yep. Skull shaver. So
Ooh.
for those that, is this going to be video?
Yeah.
Yeah. So I've got a nice clean shaved head.
That's it.
Before that, and you can tell there's a lot of like balding people that haven't yet discovered. You can get this 4-blade thing that
Yeah, I've seen it.
shaves your head in 2 minutes, and you know I don't have to think about it. It looks the same every day. I'll look the same. I'll look the same when I'm 35.
Very iconic.
I think Ben's kind of like, I might have to get one like that.
Yeah, Ben,
my
if you need a
favorite
chat,
was,
let me know.
Sublingual minoxidil.
Yeah,
That's my
For
favorite
now.
purchase.
I would be careful of the drugs that are used to treat hair loss.
What are the side effects? Let's talk
I
about
think minoxidil's okay, but there are some others that
The other one,
I would-
finasteride, is not
finasteride.
very
it. Will
good.
it make you have lucid dreams or something?
Allegedly.
Probably the inverse.
Oh,
Yeah.
okay. Interesting. So a couple more. If you could acquire any skill instantly, what would it be?
Coding.
That's obvious.
If you could eliminate one chore from your life forever, what would it be?
Washing my car.
Why?
Probably, that's an excuse because it's like hideous.
Okay.
It's really dirty.
Fair enough. I think we should finish up there, yeah? So we'll move on to one final reflection question, a bit philosophical. What is the single most transformative realization or piece of advice you've encountered during your journey?
Okay, a bit practical,
Yeah.
but in venture capital and working with founders, it's not your job to give founders the answer. It's to help them feel empowered to work things out.
Brilliant. Awesome. Well, Hunter, it's been an absolute pleasure. Second interview done with you. So it's been a pleasure and we look forward to seeing you develop.
Thanks, gentlemen. Have very much enjoyed it.
Thank you.
Cheers.
Now, we talk a lot about business and entrepreneurship, but to build the future, you need people and a place to build from.
Discover the perfect workspace for collaboration and productivity.
Melbourne Connect Co-working is offering our viewers an exclusive 25% discount on 12-month memberships.
Links are available in the description now.